Hello, it's Robert Miner with this week's DT Trade tutorial video. So I'm going to talk about a couple of markets and emphasize that we want to be traders, not forecast. So we trade, don't forecast, and to trade what you know. There's a real problem you run into when you try to forecast a market. Where it's going to go is that you'll tend to believe your forecast, and then you'll start to ignore the technical position and technical signals that warn that more than likely the market isn't going to continue into that forecast. So let's take a couple of markets and see what I'm talking about here. Well, this is the ES, and I've moved it to the right. So we're back 2 or 3 weeks ago. This is the daily data. Back 2 or 3 weeks ago. And as of the last bar in this chart is, and this is exactly what I anticipated 2 or 3 weeks ago, and had no reports that this was probably a 1 or A decline, impulsive decline. That means we're going to make a 2 or B correction followed by a 3 or C continuation to a new low. And as of this last bar, we had made a daily momentum bear reversal. Now you have to take my word at this time that the weekly momentums, they're either overbought or they were bearish. So we had a dual time frame momentum set up to have completed a wave 2 or B and a possible ABC correction into the 62% retracement. Ignore all this other stuff. When I add bars on, that'll pop up. But what I want to emphasize here is that this was a trade opportunity with a probability of completing a correction, or I should say in a position to have completed a correction, followed by a continuation to a new low. Now, in a position to have completed a correction doesn't mean I'm forecasting a new low. I'm saying if it's in a position to have completed a correction, it's in a position to consider a trade strategy short for the potential of a continued decline to a new low to make a wave 3 or a C. So the key here is it's a trade setup for at least a daily high, regardless if it goes sideways to down for a few days or continues to a new low. Let's add some bars on to this data. And there we go a few days later. Boy, we had this sharp decline a few days later. It was looking pretty good. Maybe this was a little different. Instead of a simple ABC, maybe it was an A and a B and a C. I think that's what I had at the time. But again, it was still in the, let me go back a bar. It was still in the position to have completed a wave 2 or B correction with the potential for continuation to a new low. Well, here we are a few days later. We already made a bull reversal in the daily, and there where the daily got overbought. Has anything changed? Weekly momentums are still bearish and not oversold, and we're still in that position to have completed an ABC correction at the 62% retracement, and as I was calling that a week or so ago, potential for ABC flat. It's still in a position to have completed that. Now, am I forecasting a new low? I'm saying that, listen to my language, it's in a position to have completed a wave 2 or B correction followed by a wave 3 or C to a new low. And given that the daily momentums are dual look back overbought, again, basically a triple top into the 62% retracement. The weekly momentums are still bearish and they're not oversold. What a great opportunity. And this was on a Thursday, and I think it was Wednesday I gave all the how this is a probable A, B, C, and even broke this down into 5 ways. Great setup on Thursday's update. I said an immediate position to consider short trades. Here's last Friday. Oh boy. Fantastic. Nailed that wave 2 or B for a probability of a continuation to well below the August low. Oops. The market made a sharp reversal. Let's just add some more data. Oops, 2 more days, made a bull reversal. That was just last Wednesday, made a daily momentum bull reversal. Probably going to be sideways to up for 2 or 3 days. I'll add the data right into Friday, and that's exactly what we were, sideways to up for 2 or 3 days. We're now reaching the position to make another daily momentum bear reversal. But what's changed? What's changed? Well, let me go back to the weekly data here. This past week, we made a weekly momentum bull reversal, not just a bull reversal, but a dual look back bull reversal, usually followed by at least another 2 to 3 weeks sideways to up. So what do we know? We know now that the weekly momentums are bullish. And we know now that more than likely we are not in a position to have completed a wave 2 or B correction followed by a probable continuation to a new low. We're just in the opposite position, that we've probably completed a weekly low, and each daily momentum bull reversal would be a dual time frame bullish setup for the market to continue sideways to up. So I have people now and then write me. Sometimes I put some of these charts up on Twitter. Thing I don't do when I put them on Twitter is I don't follow up on them, because the follow up is just for subscribers. So where we went a couple 3 days sideways to down following this great setup, about 3 days later we made a bull reversal, indicating that the market is not going to continue lower. Where we made this ideal setup right here to have completed a wave 2 or B correction, down sharply the next day, but the following day a reversal, and 2 days later a bull reversal. And our weekly momentums have made a bull reversal. So that's why we follow up. We don't want to have expectations that the market is going to go to a certain time or a certain price level, because if we have those expectations, we tend to ignore a piece of technical information that is contrary to those expectations. So again, what we're looking at is to trade the market to identify conditions with a high probability outcome and with acceptable capital exposure. We can identify the probable outcome, meaning if indeed this was a wave 2 or B, whereas likely the wave 3 or C to go, some minimum targets. If we then have a confirmation of that reversal, and again, we never had confirmations of this reversal. We never made lower closes. This decline in this area never closed below the last swing closing low. This low close never closed below the last swing closing low before it made the bear reversal. So beware of having expectations. Look at the current technical position to see if it supports a continuation or if it's warning that we're probably not going to continue. Let me take a look at one more critical market. So the next example I'm going to take a look at is soybeans. Now, don't stop viewing this tutorial just because you don't trade soybeans, because what you learn from it can be applied to any other market. It's the concepts and the principles we're looking at that's most important. And by the way, you should be looking at least one or two of the agricultural markets. Grains are a great one. I've always looked at soybeans. I've traded them for on and off for over 30 years. And are very interested in them again this year. So here's a couple of weeks ago with soybeans. This is daily data, and at the time looks like a possible ABC correction, and we had this 5-wave advance, real obvious, or pretty obvious on the daily chart, real obvious on the 240-minute data. And this is how I was looking at this, probably a wave 1. So we wanted to look at the next daily momentum bull reversal for a setup to go long. At this time, I don't think the weekly momentum quite reached oversold, but it was almost there anyway. So we went down for a couple more, several more days. So here we had an inside day and a bull reversal in the daily momentum. And by this time, the weekly momentum was at least oversold. Boy, what it looked like just an ideal setup. This is textbook Elliott wave A, B, C, 5 up. That would indicate the higher time frame trend has changed. We made a bull reversal in the daily data. Well, particularly because this was right around the time of news events like tariffs and trade wars and all that. What I basically said was I think this is a perfect technical setup here to immediately go long But I want to see it close above at least a little minor swing high, and this closed like 3 days ago before I consider a long trade, and that it confirms this daily momentum bull reversal. So pretty simple. Gets in an ideal position for technical position for a long trade, with the potential, if indeed this is an ABC, for continued advance to a new high. But I want the market to, even though it's in that ideal technical position, and even regardless of the news events going on relating to soybeans at the time, I want the market to say that it's made that reversal, give me the setup to go long, and then I'll be able to go long with the fairly low capital exposure with maybe it's not going to be a big rally that goes to a new high, but it'll be able to participate with minimal capital exposure and a high probability trade. And the high probability is going to come from if it closed over that high from 3 days prior to that. I'm just going to add some more bars. It poked above it and then went straight down. It didn't close above it. So we trade what we know. We don't get this forecast in our mind that, oh, we've made the low, we're going to go to new highs. We're in a position to have made an ABC correction. We're in a position to have made a weekly low, and we're looking for the smaller time frame daily to confirm that's probably the case. So here we go. I'm going to bring the data right back up through today. And we're in exactly the same position, or a similar position, as we were a week or two ago. In that, again, weekly momentums have actually now made a bull reversal. The daily momentums are bullish, but they've already got overbought. But we need to make a close above a significant swing high close, or at least a minor swing high close. I'm looking for a close above this swing high. And if we make that, then more than likely we've indeed completed a wave 2 or B weekly low. I would then wait again for the setup, because I don't know, boy, it's tough. You get in your mind, boy, the beans are going to go to a new high. They're going to go up about $2 or $1 or $2. Some big gains over the next few weeks or months. The trade war is over. Well, technically, it's indicating it probably is over. But we want the market to set us up with a low capital exposure setup to participate, whether that outlook comes true or not. So what do? Let's get that close above 873 and then wait for the next whole rotation in the daily momentums and make a bull reversal. Now maybe we don't close above 873 before we make the next daily momentum bull reversal. But if we make the bull reversal with price above this low, given that the weekly momentum is bullish, following that bull reversal, we'll identify what the little closing swing high is prior to making that next daily momentum bull reversal. Might be closer to the market, and we'll look for the market to the beans to make a close above that to signal again that the weekly low is complete. So again, don't just jump in there because you have a forecast for much higher prices, and it looks like we're in the beginning stages of that. Let the market confirm its reversals and trade what you know. And what we know now is that the weekly momentum has made a bull reversal. It's dual look back bullish. Take a look at that from the oversold zone. That's what we know. We know that the daily momentums are bullish and they're reached overbought, so we know that more than likely we're at or near a daily high. What we know is that if we make the next daily momentum bull reversal with the weekly momentums a dual look back bullish, that will be an ideal setup to consider a long trade on some signal that low has indeed been made, which would be like a close above a recent close high. So again, let's not forecast, let's trade. we can take a look at the position of a market, the technical position, and say it has a good probability of doing such and such, in this case, making a new high once the low is confirmed, but then we don't, that's a forecast, that's a potential. What we want to do is be able to enter the trade with acceptable capital exposure on a high probability setup that'll at least last a few days, even if it doesn't continue the trend in the higher time frame. Well, that's it for today. We'll be back with you next week with a new trade tutorial.